The Chinese central bank, People's Bank of China, now owns 1% stake in India's largest housing finance company, HDFC. Now, we've learned that the Chinese central bank was already a shareholder with a stake of about 0.8% initially, and then it upped its stake in HDFC, taking it to just a little over 1%, after which it is demanded of the company that they declare their shareholding. So the rumor mills have been ringing, and people are wondering whether this is just an ordinary stake sale or is it something unusual. So to know more about that, we've got as a guest on our show today, Karan Bhasin. Karan, welcome.
Hi Karan, nice to be here again. From what I know and from what it appears to be the case. Deepak Parekh, who's the HDFC chairman, has clarified that this transaction is not for the Chinese central bank itself. It is for the Chinese sovereign wealth fund. And as is the case, even the Saudi Arabian Monetary Authority picked up some stake in HDFC on behalf of the Saudi wealth fund. Uh, so yes, I mean there is some precedent to this happening, but in my mind, there's a fundamental difference when Chinese sovereign fund or the Chinese monetary authority, which is their central bank, does this, and when a country like Saudi Arabia does this, and that difference is that we have adequate experience over the last couple of decades, with China, which suggests or rather shows that it does not comply with rules of the games. And keeping that in mind, I would be concerned that the sort of central bank did participate in secondary market and picked up even though it's a minority percentage stake, but yes, it's a 1.01 percentage stake in one of our largest mortgage lenders. What is really concerning to me is that this is not just a one-off instance. Uh, Chinese funds have been going around markets all over the world, picking up, some of these stressed securities, etc. So it appears to me that they're basically trying to establish a hegemony, or rather, maybe even go into some sort of hostile takeovers somewhere down the line. And that to me is a really worrying concern from the point of view of strategic interest, geopolitical stability, etc. Because this is a regime that, remember, first denied that there was this virus, and it allowed the virus to spread so quickly. So it is not as responsible as any other country would be, and I think that's where the bulk of the concern comes in.
Right. Is there any precedence for, say, central banks acquiring stake in other financial institutions of other countries?
Well, I mean, not that I can think of. I keep China as the exception anyway, but it's very hard for me to think of a situation, and I don't recall if it has ever happened that, say, Fed would perhaps, invest in a private bank in the UK or maybe in Germany, etc. I don't know if those sort of transactions have happened in the past. As far as my knowledge is concerned, as far as I recall, I don't think that has happened. It is, of course, different. A lot of people have been saying that Chinese have been investing in a lot of companies, but please remember, companies are fundamentally different from banks. Because banks are your engines of growth, and even though there is this clarification that it is the sovereign wealth fund for which the central bank has made this transaction, but uh, just we have to remember that there is no clear demarcation in the Chinese state. So effectively, your bank has one shareholder, which is effectively another country. It is something that I think is very unusual, uh, and definitely something that we should be slightly alert about in the immediate future. Maybe it's just some investment that they've made to profit in the short run. Even that, to my mind, is not something that should be taken lightly.
Right. Thank you so much, Karan, for your insights.
Thanks, nice to be here again.